morning, traders. Welcome to the TMT Stock Market Strategy video for Friday, December 18th. Nasty day in the markets yesterday, I got to tell you. We were talking about that reversal the day before. We mentioned if when the Fed does raise and markets rally, we usually get a reversal, whatever that day was, whether it be a sell-off, we would get the buy side and we would rally, or vice versa. And sure enough, it was that sell. And we did get that. Where do we go from here now? Very, very important. Well, we've been talking about that the markets are in big trouble, and I do think that they're in trouble. Do I think that they sell off and liquidate and really sell off hard here between now and the next 2 weeks? I don't think so. We have to get through options expiration today. That's the first thing. But guys, watch the gold and watch oil. I had a good email yesterday, and someone said, well, you know what? The guys from CNBC said that oil is done going down and gold should be bought. And I'm like, oh my gosh, this is not a good thing. Please do not listen to the pundits, or myself for that matter. Do your own homework. If you get an idea from someone, research and make sure that what that person is saying, you can get some credibility from any type of resource, any type of information that you may find, okay? But be careful with the pundits. They're all talking their book. The only thing they want to do is just either buoy their positions or make a Monday morning quarterback call, which does nothing for you at all, okay? So just please be careful. All right, on to the markets. UUP, dollar ETF, beautiful bullish falling wedge. We pointed that out, and look what happened. Boom, we go higher. I think the dollar goes high and challenges highs, and what's going to do to gold and oil? Lower, and all commodities. Here's the GLD. Remember I mentioned, guys, I think you're going to get it below 100, and I don't mean 99. I think this goes further, believe it or not. As a matter of fact, I'm calling 98 right now, but the way the price action is, and if this thing really flushes below 98, we're going to go lower, much lower. We could probably be in the high 80s in GLD, and in the GC contract, 880, 890, even 900. I mean, I'm not saying it's going to go straight down, but I would not be catching a falling knife. We will be participating in this gold and oil, but we need to wait. There's plenty of room to the downside, okay? And I think that we still flush lower in gold. Next, USO. Here's the oil, 1074. I mentioned this when we were here. I said, guys, I had a couple emails again. Look, I think the bottom is in. What do you think? No. That's not the way commodities work. They will continue to go in one direction until it just collapses. So until this happens, you might even get it in the high nines now, okay? I think that it's almost there. It's so deeply oversold that, guys, that I really think that we're ready for a spot here. But, again, you have to be patient. Be patient if you're looking to nibble into a position. There's no reason to buy it now as this market's headed lower, much lower here, okay? So let's go back. Let's go right into the indexes. All right, so we got this big bull flag, or we have an M formation here, right? I don't want to mess up the charts too much, but you can see we have a nice M formation. Here's that left side, and here's that that neckline. If we break it, that'll trigger a bearish pattern. We're still in this channel, okay? So right now we're holding that key level of 204, which would be 20, let's say 20, 25-ish, 20, 30-ish in the S&P cash. But again, guys, watch this area here, because if we start to really break down, I think the markets will really start to flush here. Not a good sign. I think, again, the markets are in trouble. Here's the Russell, our secondary leader. What this looks like to me is only a bear flag, back testing this neckline right up in here. So again, not a good sign that this is not working, or at least not starting to rally. When I mean work, rally hard, at least get back above into this area here and get above the 20 and the 50, which it's not doing. So again, not a good sign. Transports, I mean, this is the most ugliest chart I've seen in quite some time. And again, guys, big down day. This is something that really needs to be paying attention to. You guys need to really watch this transports. And for those of you holding positions, like I mentioned before, there's no reason to add to any position up here. Even if the market rallied and tried to challenge the highs, believe me, I do think that you will probably find prices lower in January. Okay, and remember, and why do I say that? Good conversation last night, and I said the reason why is fourth quarter earnings comes out, and that's going to be the catalyst to at least to move higher in the first quarter. Do you honestly think that a lot of these companies are making big money, or they're beating estimates, other than a handful of a few? I mean, that's not that's something that really needs to be taken into consideration here. So they're going to be looking at fourth quarter earnings and guidance. And I do think that that's the push lower for the markets, at least for the first quarter. I do think we rally at one point, but I'm also going to put out a longer-term picture, a long-term video closer to the end of the year, okay? Diamonds, same thing. You can see very big down day. But again, held at 200 and at 50, so that is a good sign. It is a lagging index, but still a good sign that it held up yesterday, okay? And lastly is the Qs. Now you got to watch the Googles and the Facebooks and the Amazons, Apple. I think Apple's in really big trouble. We've been talking about Apple at 118, and I mentioned their suppliers are really getting hurt. So if their suppliers, if Apple's not buying from their suppliers, what's happening is a major slowdown. So when you get, you get an earnings report on Apple and Apple rallies, it's just totally manipulation. And here, let me just show you Apple real quick. Here's the Apple chart right off the cuff, and here is where I believe it went to 121. This was the earnings news, and we rallied up hard. Look, we gapped down, and look what's happening now. I mean, I do think Apple's in really big trouble, and if Apple starts to go lower, much lower, it is going to affect the other indices as well, because it is heavily weighted in a lot of the ETFs. So just keep that in mind, guys, all right, when you're trading technology. All right, guys, have a great day. Enjoy the weekend. Hope you guys are getting ready for the holiday season, and we'll speak to you next week.